Welcome back, my bright UITM diploma students. Get your colorful pens and highlighters ready because today we're diving straight into the tricky, but honestly, super fascinating world of MAF201 contract costing. You know, contract costing usually feels like this heavy, calculation-dense monster of a textbook topic. But today, we're going to transform it. Step by step, we'll turn on that light bulb in your mind. It's not just about crunching numbers. It's literally about telling the financial story of a construction project. And by the end of this explainer, you're going to be reading that story like an absolute pro. All right, here's our study plan for today. We've got 1. Welcome to contract costing. 2. Progress in contractee accounts. 3. Contract asset or liability. 4. Case study, SBJ Bierhad. 5. Statement of financial position. And we'll wrap it up with 6. Summary and exam tips. Let's dive right into Section 1. Welcome to contract costing.
Picture this. You're managing the finances for a massive, multi-million ringgit construction project. You're sitting at a pristine, organized desk. Now, in a huge long-term project like this, we obviously don't get paid all at once, right? We bill in stages. So to keep everything from falling apart, we need very specific accounts to track exactly what we bill our client and what cash they actually hand over to us. It takes some special accounting magic to keep the books accurate and fair over time.
Moving on to Section 2, Progress and Contractee Accounts.
What's really cool is how beautifully simple these accounts are when you just break them down. First up, the Progress Billing Account. This simply records the value of work certified, or VOW. Basically, it's the official value that an architect or surveyor agrees you've successfully completed. Then we have the Contractee Account. Think of this as your account receivable. You compare that billed VOW amount against the actual cash you received from the client. And the difference? That's your retention money. It's the cash the client holds onto just to make absolutely sure you finish the job properly.
All right, Section 3, Contract Asset or Liability.
Okay, listen up, because this right here is your master formula. Seriously, highlight this in your notes. To figure out if you have an asset or a liability, you just follow 4 simple steps. Step 1, take your cost of work done to date, your COW DTD. Step 2, add your recognized profit. Step 3, deduct any provision for foreseeable losses, if you have any. And Step 4, subtract your progress billing. It's just a perfectly logical flow, showing the total value we've earned minus what we've already billed the client.
Now, here's where I see so many students trip up. When you calculate that master formula, the sign of your final answer tells you literally everything. If you get a positive figure, the company has claimed less than it should have. The customer owes us. So boom, contract asset under current assets. But if you get a negative figure, it means we've overbilled compared to the actual work done. We owe the customer, making it a contract liability under current liabilities. So just remember, positive equals asset, negative equals liability. Lock that in.
Let's ground all these abstract concepts in Section 4, Case Study, SBJ Bierhad.
Meet SBJ Bierhad. They just bagged a 2 million ringgit contract to build this gorgeous playground and recreation park. The project kicked off in July 2017 and is scheduled to wrap up by December 2018. Now, we're stepping in as the accountants here, and our job is to sort out their books at the financial year-end of May 31st, 2018.
When you look at the extract of their balances, yeah, there's a lot of data. But let's zero in on the key numbers for our contractee account. Down near the bottom, you'll spot the value of work certified is 1.4 million ringgit. And right below that, the actual cash received from the contractee is 1.26 million ringgit. Those are our 2 golden numbers, guys.
So, how do we use those golden numbers? We plug them straight into a neat little T account. We put the progress billing, our VOWC of 1.4 million on the debit side. Then the cash received of 1.26 million goes on the credit side. The balancing figure carried down, that's 140,000 ringgit. And what is that 140K? Our retention money. The client is holding on to it for now, which means it sits perfectly as an account receivable for us.
Next up, the big question. Do we have a contract asset or liability for SBJ Bierhad? Time to do the math on our master formula. We take the cost of work done to date, which we calculated at 1,194,500 ringgit, and we add the recognized profit of 225,500 ringgit. From that total, we subtract our progress billing of 1.4 million. And the result is a positive 20,000 ringgit. Because it's positive, we are absolutely celebrating a contract asset of 20K.
Now for the grand finale, Section 5, Statement of Financial Position.
Take a look at this beautifully structured table.
This is our final SOFP extract for SBJ Berhad. To grab full marks in your exams, you absolutely have to categorize your items clearly into non-current assets, and current liabilities. Everything needs to be in its perfect little home.
See how all our hard work pays off? Under current assets, we proudly slot in our 140,000 ringgit account receivable for the contractee, right next to our freshly calculated 20,000 ringgit contract asset. We've also got our 20K material stock on site and 6K in prepaid subcontractors sitting pretty under there. On the flip side, accrued wages and site expenses rest safely under current liabilities. But wait, I really want to highlight a massive trap students fall into. Up top under non-current assets, never ever forget to deduct your provision for depreciation. In this case, 16,500 ringgit from your machine cost to show the correct net book value of 183,500 ringgit. Don't let that easy mistake cost you points.
We are almost at the finish line. Section 6, Summary and Exam Tips.
Let's do a super quick recap. First, you absolutely must memorize the COW DDD plus profit minus progress billing formula. Make it your best friend. Second, always double-check your positive and negative signs. Remember, positive is an asset, negative is a liability. Third, like I literally just emphasized, deduct that depreciation for your net book value on the SOFP. And finally, keep your accruals and prepaid straight. Accruals are current liabilities because, well, you owe them, and prepaids are current assets because you've already paid in advance.
Honestly, if you pin down these specific steps, keep your T accounts neat and organized, and dodge those common traps we just talked about, you are going to absolutely crush the MAF201 final exam. Accounting is really just a puzzle, and you've got all the pieces sorted right here.
So, I'm going to leave you with this thought to carry into your revision. What is the very first master formula you're going to write down when you flip open that exam paper tomorrow? Get out those colorful pens, draw out those T accounts, and remember, you've totally got this. Thank you so much for joining me for this explainer. Happy studying, and I'll catch you in the next one.